Any intelligent fool can make things bigger, more complex, and more violent. It takes a touch of genius and a lot of courage to move in the opposite direction. Albert Einstein. And of course, old Albert is so correct, and that's what he sought over and over and over, was to make things as simple as possible, not simpler. And it does take courage to move away from multiple indicators, all the other little things that you can try to grasp at. And then what you end up having happen is you have analysis paralysis. You never do anything. You have too many moving pieces, and your method does not work. We keep it simple, and we strive for greater and greater simplicity. It's one reason I love the Patreon calls every month, because I get to talk to folks who are serious about trading, have their questions, and I get to speak out loud to them and theorize a little bit and talk about things they're interested in. Want to know more about Patreon support? You can see the link in the show notes, same as the book. We'll talk about more of that at the end of the show, but let's jump right into these charts. Everything up for the day on Friday. What does that mean to us? Well, we look at the S&P 500 up 0.46% for the day. Price movement's well above the weekly trend line. Candle is bigger, going higher. We can see things continuing to peak up and up for all those naysayers who are like, how long is this going to go on? I'm the same way to a point. But if the charts are having us move forward, then we do it. Now remember, we're not talking about illiquid positions. We're talking about jumping into trades, staying in them for as long as they work. If they don't work, get out. But we're talking about jumping in and making smart decisions in a totally liquid environment. What does liquidity mean? It means the difference between the bid and ask is a penny or two. So if things move in the wrong direction, you're not losing tens of thousands of dollars, or depending on how much it is that you put into the position. And again, you have the magic of the weekly vertical crossover working for you too. So again, I want you to practice trade this stuff. Remember, we're not an education firm. We are an education firm. We're not a stock calling service. So we want you to be with us every day and practice. You'll see in the show notes there is a link to our PDFs, daily market worksheet, weekly market worksheet, which is what you should be filling out now. You should at least fill out the weekly market worksheet once a week. And of course, the trade worksheet anytime you get into a trade. Special training for you today. In fact, I'm trying to remember what that training is that I put in there for you. I'm turning to it right now. And again, that's to the folks that actually subscribe to the channel. If you're not a subscriber, go to chartingwealth.com, sign up, and subscribe, and you will actually get all the special trainings that we put out for you on a daily basis. And of course, we've got a special training for you this week. It is all about the rule of simplicity, which we've been talking about. It's Occam's razor. I want you to have that. Look in the show notes, those who are subscribers. Again, it's free. Go to chartingwealth.com, put in your name, email address, boom, you'll get it. So we see the weekly chart, another up week, derivative oscillator gaining upward momentum, price percent oscillator heading up, go from the weekly to the 2-day. What do we see there? We see that 2-day, again, pushing up strongly. The prior 2-day that ended on Wednesday, that was Tuesday and Wednesday, was a green spinning top, indecision, tending up. And of course, it continued to do that and actually launched higher. Nice, decent sized candle with a wick on top, moving higher than we saw in the past. Price percent oscillator heading up, derivative oscillator flat. We go to the 4-hour chart. What do we see? We see it pulling away. How many of you guys were paying attention and pulled the trigger, jumping in at noon today, somewhere around the opening at $299.38. How many did it? How many? Well, we see it moving away toward the end of the day. Price percent oscillator is separating from the red signal line. Derivative oscillator moving up. Told you to watch for that. That has given you that opportunity again if you did not jump in earlier. So again, that's quite nice. Let's go back to the weekly. Going to go to the Qs. What's going on with the Qs? Going to start with the weekly. Had a weekly vertical crossover end of last week on the 5th of July. What do we see happening over the course of this week? A bigger candle. with a higher topping, which is good. Derivative oscillator turned from negative to positive over the course of this week. Price percent oscillator moving away from the red signal line. 2-day chart, strong, well above the weekly and above the 2-day. Looking quite nice, friends. We go to the 4-hour. And of course, where was your jumping in point? That was all the way back. And again, you can see the price percent oscillator. The more it goes up, it will actually pull further away from the red signal line the more it goes along. I don't know how many of you got in around the afternoon, around noon at 191.12. Some of you may have tried to jump in later around 192.36, and that would have been in the afternoon after the close of the morning candle on Thursday. And of course, we ended things for the week, well, the high on Friday afternoon, where the market pumped up higher on the NASDAQ 100 up to a high of 193.54. So again, nice. Things moving in the right direction. So again, the magic of the weekly vertical crossover is still a working for you. So that's what we like to see. We're going to go from the stock charts the stock indexes that we just looked at, back to the weekly, and then to 20-year bonds. What do we see? Well, on the weekly chart, we have a down week, a red spinning top, a solid red spinning top. Indecision tending down, has dropped through the weekly trend line. Derivative oscillators lost a lot of energy. Price percent oscillators heading down, hasn't crossed over yet. Appears to be, moving in that direction. Look at the movement on the 2-day charts. A big, strong, huge down candle over Thursday and Friday, really dropping off. The wick on the bottom is a result of some of the up movement on Friday, but a really down bad Thursday. And of course, we see the derivative oscillator gaining downward momentum. Price percent oscillator spiking over, going down. 4-hour chart. We can trace that crossover going down all the way back to Friday the 5th of July. Had a big down morning, a little bit of an up afternoon, and then sideways, and then really started dropping and accelerating. Started on Wednesday morning and accelerated through Thursday. A little bit of a pullback going up on Friday afternoon. And of course, these are Heiken Ashi candlesticks. That means average pace. That's what that's showing you. If you haven't taken that training, I'll put that at the end of today's video. And yes, we'll have it linked at the end of today's video, along with a link where you can find out about our book and purchase that. If you're interested and you want to support the work we do, that's really the only way. Besides that and our Patreon supporters, Charting Your Way to Wealth, you want to speed up, supercharge your training. That's what it's all about. Our book, Charting Your Way to Wealth, is there for you. What do we see going on with gold? Weekly vertical crossover on gold going up back on the 7th of June. Things sort of went sideways the next week, ending the 14th, up a little bit, but really started spiking up the 21st, and then the week ending the 28th of June even more. Pullback the week of ending July the 5th, and then of course this week trying to regain some of the ground, hasn't moved up anywhere near where it had finished at a high of 135.55 back on Friday. That's for the week, Friday the 28th of June. Highest that we got over the course of this last week, 133.87. But we do see the price percent oscillator is moving up. Derivative oscillators about flat. We go to the 2-day chart. What do we see there? We had a green spinning top, and then of course we had a green up candle. Prices above the weekly trend line, has pushed through the 2-day. We're going to have to redraw that at some point. I guess we could try redrawing it now. It's sort of hard. That's pretty worthless. A flat line. We'll just leave it where we had it on the 2-day chart and wait for a point where we can redraw it decently later. But we see in gold, the 2-day chart still heading down, still positive, but the derivative oscillator's already flipped over, going down. Now still up. We still have the 2-day and the weekly in confirmed up moves. What does that give us? Gives us the ability to jump into a crossover going up on the 4-hour chart, which it just won't do. Gold started moving up a little bit on the afternoon of Thursday, all the way back on the 9th of July. And then the Wednesday chart, we see things, I'm sorry, that was in the afternoon on Tuesday, the 9th. And then, excuse me, really accelerating up on Wednesday the 10th in the morning and afternoon, and then sort of blowing that steam off and only really regaining some energy in the afternoon on Friday. So we'll wait and see. Watch over the course of this next week if we have a crossover going up on that 4-hour chart. That would be the signal to pull the trigger on another practice trade on gold. And let's ride that pony, see how far it goes up. May only go up to around 133.72, but it may not. We'll watch and see what gold does. Maybe it'll blast through that. Maybe it won't cross over going up at all. We'll let the charts lead us, right, my friends? That's it, folks. We've covered the week. That's the weekly comprehensive review and forecast. If you've not purchased the book, do so. If you've not signed up for our texting service, that link to how to do that is also in the show notes. What's that about? Whenever we have a weekly vertical crossover going up or down, which is our strongest signal for jumping into either an inverse move, it's going down, or a positive, a long position or a short position, depending on which way the weekly vertical crossover is going, we actually text that out to everyone who subscribes. You simply, you put the number 33, you dial it, or you put it in your text message, 33222. That's the number you're sending the words charting wealth. One word, charting wealth. No space between charting and wealth. And again, 33222. The instructions are in our show notes. If you live overseas, I'm sorry, that doesn't work for you. But we always talk about weekly vertical crossovers in our comprehensive review and forecast, so you'll always know. Even if you're one of our friends living in India, in Pakistan, in the UK, in Australia, in New Zealand. I mean, we're at Brazil. I can just go all over the world, and we appreciate all of you being with us, because we want you to understand how these markets work. It's not nearly as complicated as people want to make it. But again, think about it. They don't want you to know this stuff. They want you to think it's so complicated. Only the folks in Wall Street can do it. That is just not true. And those of you who've been with us long enough, I get your postings on YouTube. I get your emails, see what you put on Facebook, and I appreciate it. It keeps me motivated, particularly today when I don't feel so good. I think maybe I ate something bad yesterday, but it wasn't enough to keep me down and delivering this message to you, my friends. God bless. All the best from the whole team here at Charting Wealth World headquarters.